Robert. Okay, Robert. So why do you use a credit union?
Less fees. They seem to care about their customers more.
Okay.
They're not just a number like the big monolithic banks.
Right.
Better interest rates.
So we just spoke with our friend Robert here, so now you understand why a lot of people use credit unions, because the money goes back to its members. So you may be asking, okay, Ram, how come I've never heard of a credit union? And this is actually a valid point. It's funny, I actually had this conversation with our great camera guy here, who's 20, young, and he said, hey, how come I've never heard of a credit union? Well, I want you to ask yourself one question. When is the last time you have seen a commercial for a credit union? Think about it. When you watched a Super Bowl, a basketball game, the NBA Finals, baseball, hockey, I want you to ask yourself, when is the last time you've seen a commercial for a credit union? You don't see it, typically. Banks spend millions of dollars to market, and banks are in constant competition with each other. So Wells Fargo competes with Bank of America, which competes with Chase. They're all in this competition for you. That costs millions of dollars to promote. So who pays for that? You pay for that when you're with the bank, and you have to pay that in a form of higher interest rates, higher fees. That money is not free. If a bank is spending $10 million a year to market, that money comes from somewhere. It comes from you, and it comes from you when you pay higher interest rates, you pay more fees, you go to a bank and go do a deposit at another bank, or try to take money out, and sometimes they hit you with a $3, $4 fee just to take money out. Think about that. It may not seem like a lot, but when you do this to billions of members, that's a lot of money. So remember, these banks spend billions of dollars to market to you. I don't even think it's millions, it's probably billions if we look at it overall. And all that marketing comes at an expense to you as an individual. With credit unions, you don't really see this type of marketing, and the money goes back to its member in a version of lower interest rates. And you also have to remember, with credit unions, they're for nonprofit institutions. Banks have to be profitable for their investors. So at the end of the year, the bank has to show a profit for its investors or shareholders. Credit unions don't have to do that. So the credit unions aren't under that stress. Think of it this way. Imagine a big company, a big hamburger place, and a small hamburger place. A big hamburger place may charge you more because their overhead is higher. They have more staff, there's more electricity, there's this bigger overhead that has to be paid. And who pays for that? You pay for that as the customer. With a smaller restaurant, for example, or a smaller hamburger place, they may not have that overhead, like a food truck. And their bottom line is just to make good food because they don't have all these ridiculous rates. So you may be asking yourself, what should I use? Should I use a bank or should I use a credit union? Well, we're gonna go over a couple pros and cons to each. So I myself actually have both. I have a bank account and I have a credit union. I do like the credit unions a lot more for the personal experience. They're much more personable. The interest rates are better. I had an issue one time where I got billed some stuff and I had to challenge it. I dealt it with the credit union. They got it taken care of very quickly. The experience was much better. The problem with credit unions, typically, someone like me who travels, the credit unions are not worldwide like a bank is, like a Chase, for example. So, for example, I do a lot of different investments online with different accounts. With Ameritrade, I have some cryptos, and those accounts sync very well with bank accounts. So when you do your deposits, it gives you the option of who's your bank, and it syncs these accounts very well, and the mobile versions are great. With credit unions, their mobile and online platforms cannot compete with these billion-dollar banks. They just typically can't. So when it comes down to, like, I need something efficiently done for my online investments, banks are gonna typically be better for that. Credit unions are gonna typically be better when you need an interest rate at a lower percentage, or if you're just doing local things and you're not, let's say, investing online, maybe you're a young person, you're just barely making money and just trying to save, I would suggest going the credit union route because, again, their fees are going to be less, they're much more personable, and you're a part owner of the credit union when you sign up. So to sum it up, banks are going to be better for online transactions. So if you're doing a lot of online payments, like myself who's a small business owner, banks are great because the platforms for online payments, syncing my accounts is much better. But if I'm a local, just regular guy and I'm, let's say, running a business or doing all that, I would suggest a credit union. So if you remember, Wells Fargo back in 2015, 2016, I believe it was, had did a couple scams, and what they did was they made fake bank accounts. And wait, what?
This is Vladimir.
Hello, wait, what? I thought I heard something.
You, yes, you. Like, subscribe, and stay away from the big banks. You must subscribe so we can win together. And give a like button. Hit the like button. Thank you.
Okay, thank you. What should you do? Well, it's going to depend on a couple different things. I'm in my 30s. I have a bank and a credit union. I use my banks for bigger transactions, especially sometimes when I travel out of state or if I'm doing my online investing, where I need my banks synced in with these platforms so I can transfer money in and out fairly quickly. If I'm not running businesses and I just want to have something for personal, I would highly suggest a credit union. Again, the interest rates are better. So let's say you want to get a car one day and you don't have the full amount of money. As in previous videos, I suggest buying cash, but if you don't and you need to maybe get some kind of an interest rate, I would definitely go to the local credit unions, as they are going to typically be a lot better on their interest rates. Banks are also good too for their own way. So it ultimately comes down to personal preference, and you have to decide what's going to be best for you. Both have their pros and both have their cons. Banks' online mobile apps are much better to use. Credit unions don't have that capacity, but again, credit unions are going to have better rates. So it really comes down to you and what you prefer. So if we get this video to 200 likes, I will do a part 2 where we actually do what the difference is between a debit card, a credit card, and what a prepaid debit card is. I'm sorry, a prepaid credit card. You talk about these, what you should start doing as a young person if you're trying to build your credit up to potentially, let's say, buy a home or a car or something of great expense, why you should start building credit now at a young age. Don't wait till you're older. Start doing it now, even with small things, because it really will make the difference when you're older. Please remember to like and subscribe. It helps us continue to provide you educational content. And I think, wait, what was that?
Please like, subscribe. We will see you soon.
Okay, thank you, weird machine at the credit union.
Ram wants you to succeed and will continue to bring you unconventional money-making content for free. Leave a comment below, a like, and if you would, subscribe for more money-making tips. Also, take this opportunity for an amazing offer from Webull. 2 free stocks worth up to $1,800. See the link in the description below. They even give Ram a free stock. Everybody wins.